Aha. So, welcome to the fourth episode of the Startup Growth Club. I'm just going to do a quick audio check and just ask that if you can hear my audio, please go ahead and drop me a note in the chat so I know everything's working as expected. Um, awesome, thank you. So, we're a group of startup founders and teams who want to learn more about how to be successful with our startups. My name is Justin. I'm the founder of UpFocus. We help early stage companies deeply understand their customers so they can build the right products, which is why it's so appropriate that we're reading the book, Hacking Growth. We've been doing that in 4 parts, one part per week, and then each Friday doing this discussion show. And on Tuesday, next Tuesday, May 31st, one of the authors, Sean Ellis, is going to join us for an Ask Me Anything. So before we get started, let me just talk through a few housekeeping items and then we'll go into the show. So if you're enjoying today's show, things that are very interesting to you, I'd love for you to be able to tell more people about it, bring people into the show by sharing using our hashtag. That's something that we're going to look at, Sean's going to look at, and that'll help us know what you found interesting. We might use that in our write-ups afterwards, or we might even bring that into the discussion if we find an interesting tweet on there. Also, this show is not really about me. It's about you and what you've learned and what you want to take away from this book. So, one of the things that you can do in today's show is you can participate, and you can do that by clicking on the little red button in the lower right. That shows you how to raise your hand, and then we can bring you up on stage and would love to hear your comments and have you join the show. Okay. So, we also have a group discussion that we have on Goodreads. So we'll drop the link for that in the chat. This is where we're discussing not only this book, but if we do more books, then this will be our central place where you can network with other founders and talk about these types of books that we can learn and get better at the things that we need to do to make our early stage companies successful. Um, Also, we do have the event coming up on Tuesday where Sean's going to join us. So we'll put a link in here where you can add that to your calendar, and then you can be reminded when it's time to do the show, and then we'll have the show link handy in there for you. Finally, we also are going to be recording today's show, and we've recorded the previous episodes. So if you want to see those, you can go check out our YouTube channel. Again, we'll drop the link in the chat here so that you can join or check out some of those previous recordings and participate with us on future shows there as well. Okay. And with that, I want to bring in today's special guest. Today, let me bring in our guest here. We're joined by Anuj. And Anuj, if you go ahead and hit your raise your hand button in that lower right corner, then I'll bring you up. And I'll give you a quick intro. Excellent. Hey, Anuj, welcome to the show.
Hey.
Awesome. I understand you have a special outfit for today's show. You dressed up for the occasion.
I did, and if I show it to everyone. This is the OG Growth Hackers t-shirt. And it still fits, and it's still a great t-shirt and still great to rep Growth Hackers every opportunity I get, because that's what changed my life and is the reason we are speaking.
Yes, I'm really grateful to have you here today. I was chatting with Sean and Ethan. Ethan had done such a great job on the show. It's like, Ethan, we need somebody else who can join the show, who's got the experience of having actually worked with the team and is an experienced growth practitioner. And you were the first name that he shared, and I'm really glad that you're able to join us today.
Okay.
I just want to chat a little bit about your background here, because
Sure.
I don't think you took the traditional path to get into growth marketing. You actually mastered in chemistry and biochemistry, and it was from there that you actually made your way into marketing and partially through sort of participating in the growth hacker community. Um, I'd love to just hear you share a little bit about your story about how you actually found your way into growth hacking.
Uh, so the story of my life is, and this began, and I remember my life changed. And you can go back on Twitter and verify this. Um, September 30th, 2013, and only time Sean tweeted, you know, hey, launched growth hackers, come check it out. Right? Only thing he ever did, and of thousands of tweets I could have seen that day, that was the one I clicked on. And again, the only reason I clicked on that was because he was one of the people I was following. Somebody who comes from a non-tech startup background, not knowing literally anything about the startup world, but reading about it and getting interested in it. And you read these articles, the top 50 people you should follow. Sean, of course, was one of them. And as I was learning and shortlisting a lot of what I thought was highly educational and actionable content for my own learning, to growth hackers, I saw that what was going on there was people discussing almost exactly the same kinds of things that I was shortlisting, rather than having some other very in-depth conversations. Uh, I, I don't know if I ever told Sean this, but I had very selfishly thought that I would use growth hackers like my social bookmark, and drop content, and big people like Sean would discuss this content, and I'd kind of get free consulting from them. And realizing that people like Sean would read it and then come right back and ask me, "This was great. I got X out of it. What did you get out of it?" Oh crap! Now I got to go read this and sound smart. But but that was like a big dopamine hit, right? That
Yeah.
Sean would want to engage with this rando nobody who just showed up, and I wanted more and more of that, and it turned out that I couldn't get enough of it, and so Growth Hackers became the first site I went to every morning, and I would read everything that was on there. And as Growth Hackers got more popular, a lot of spam started showing up on there, and so I'd have these very regular emails to Sean and the team about, hey, you need to remove spam, and what about if we did this, and what about if we did that, and email about a year later, I get this email. I think it was Morgan who sent me the email. Essentially said, we've upgraded you to moderator, stop emailing us, delete whatever you want. uh, and but from that point on, I think I started feeling a lot like a, a sort of honorary member of the team. Like, they would come to me for a lot of opinions when they were first launching what has now become experiments, but what then was Canvas. I think I got to see the very first shitty version of it, I think, before everybody else did. um, and so from then on out, it was just this natural progression that then led to, hey, maybe join the team, to anything like that. But I thought I didn't know anything about this world, and I hadn't gotten my feet and hands dirty at all I knew was theoretical stuff from hanging out in the community. And it was actually Sean's insight that somebody with a science background is probably better suited for a career in growth than maybe a more traditional marketer. And he had two reasons for that. And one was that if there's anything you learn within a degree in science, it's you learn how to experiment. And growth is nothing but applying the scientific method to product and marketing. And nobody else had articulated it that way to me, at least, or anywhere. And I don't think anybody else has ever said it that way. Um,
Yeah.
you
I
know, than him.
I really like that. That growth is really just applying the scientific method to marketing and product to a degree, right? And
Yeah.
that's a powerful insight. And your background being in traditional applied sciences, um, I we're going to go into some of the content here for retention and monetization. But before we do, I feel like we'd be remiss not to talk a little bit about some of the experimentation from the previous chapters. And how did your scientific background both sort of maybe help you with experimentation, and what things did you maybe have to learn that was a bit different about applying it to growth hacking?
Oh, yes. So what was similar, right? And so firstly, when Sean said this, right, I think the bigger aha moment for me is that all of us know how to do this. Like if any of us have been to school and have spent any time in a science lab, congratulations, you know how to do growth. Uh, uh, right? Which was like this amazing, thing that lent a lot of sort of comfort to me. And so even the first experiment doc I used at Growth Hackers was the same one I used in high school. Right? It had the aim and the hypothesis, materials, method, observations, results, conclusions, next steps. Like this is shocking that I know how to do this, uh, right? And so from that perspective, I think there wasn't that much different, right? And of course, the hypotheses were all the same, right? If we do X differently, we expect to see Y measured through Z sort of format. And so from that overall perspective, I think it was pretty much the same. And I think where I started to, fall down a bit initially was, in because at least this is what I tell myself is because I didn't have the perspective of, how to think about, let's say things like segments or events or things like that in a product or marketing context. For whatever reason, I think I was maybe getting in my own way of not being able to make the hypotheses as granular as they should have been when I first started out. Right. So that was a bit of a learning experience for me. And the second was that, I think that the sciences can get a little bit dogmatic, about and we're almost absolutist
Mm.
about experimentation. Right? And because you set a hypothesis and it's either proved or it's sort of disproved. And I discovered that it's not quite that simple, especially because there are different kinds of tests. And I'm sure you've talked about discovery tests and optimization tests in the past, right? And so I had applied that same it's either a win or it's not uh, mindset, where Sean had to sort of walk me back and almost tell me like, look, if something is better, it's still better and it's a win. It didn't matter that it wasn't as good as you thought because that was a hypothesis anyway. And right, if the alternative was 0 and the other one is 3, and you wanted to get to 10, 3 is still better than 0. We can try and figure out how to make 3 10. uh, right. So and that was like a big I remember taking a little longer than I think I should have to let go of that more rigid mindset and to look at it more from the perspective of actual real world impact. Like, is this measurably better or not? If yes, then it's a win, and let's double down on that. Right? I
Yeah,
think those are the two things.
there's a key point that you're making around discovery tests versus optimization tests. And I'm not sure we actually did exhaust discussing that in previous episodes. So maybe just quickly, in your words, how do you describe that when you're working with new companies about the two different types?
Yeah. So the discovery type tests are the kinds of things you've never done before, right? Because you literally don't know if anything's going to happen. And I'm sure you've explored the Brian Balfour battleship analogy, somewhere in the past. But this is your
Yeah,
first.
that
Okay,
that comes in the last chapter, so that's
all
fresh
right. So then,
material for this.
okay, fair enough. Okay, then so I'll hold off on that. But it's when you're literally guessing in a way, or you have very little information about whether something may really work or not. And so that's when you try these radically different things. And I think this has been proven out even in some research that I read recently, that the tests that tend to give you the biggest growth or potential for growth are ones where you take these really radically big swings, because that's what gives you the most sort of learning. And in those cases, you're not looking as much for statistical significance. You're just looking for a signal as to, is it worth my time to spend more resource here? Should I pay
Yeah.
attention to this more? Right. And I think if you were to go back and read every piece that's been written about tests, not many, if any at all, focus on this kind of testing, right? Where, and this is just an illustrative example, where, I tried maybe in marketing, organic content marketing versus TikTok ads. Like these are two radically different things, right? But when I try two radically different approaches, that's when the surface area of my learning is that much greater,
Mhm.
right? Versus just starting with, oh, I'm going to do marketing, but now I'm going to content marketing, but now I'm going to do a different kind of content marketing. It's you're still playing in the same playground, but now you're trying smaller and smaller things, right? And so I
Yeah.
think that's what tends to get written about more, because those are the ones that give you more granular data. Those are the ones that rely a little bit more on statistical significance, because you have to, right? This that much smaller to confidence that a small change actually is meaningful. You need a big sample size. Uh,
Yeah.
to write about and maybe demonstrate. Uh, and but I think that's what maybe perpetuated a bit of a myth that those are the kinds of tests you should run, and uh, all of these changing button kind of tests, or changing where things are on a page kind of tests, or things like that. Uh,
Yeah.
right. So, but I think you need to take a step back, and even like look at the most biggest example everybody talks about with tests, or at least the end result of a test is the Sean Dropbox example, right? Everybody talks about, oh, that was the growth hack that worked, but not one. I haven't found one piece of content out there on all the hundreds of tests they did before that that didn't work, or were small wins that led to the insight that then said, okay, maybe we should try a double-sided referral program,
Yeah.
right? So there were some very big swings that happened before that then led them to this insight and said, okay, maybe there's something with referral, maybe there's something in this area, and now let's try this double-sided thing,
Yeah.
uh, right? So I think sort of try to lean as much on, to the extent possible, let a lot of our initial tests be these really really big swings. And that doesn't mean they have to be expensive tests or big changes, because as with everything, you have to look at it through the lens of hypotheses and what you really want to learn, and construct your minimum viable test based on that. And I think that's the trap, is like you build to learn versus you build based on what you've learned. uh, and right, so I think that is, I think for me the difference is that I always want to do the big ones first, understand if it's worth my time here, and then go double down and optimize that signal as much as I can with these
Yeah.
smaller tests.
Yeah. I, find it interesting that you talked about when you were first getting started in marketing, the way you might look at events or some of the things that are maybe more specific to digital marketing, um, as like, oh no, I really have to deeply understand this if I'm going to be any good. And I think conversely, marketers who maybe don't come from a scientific method background look at the scientific approach to understanding, calculating statistical significance and how you, design an experiment as like, oh, I need to like deeply understand this. When in fact, the the bigger outcome takes a lot less science,
Totally.
to sort of understand. And it's really only in the optimization stage where your rigor has to go up. But there is one key thing that I think is important, which is many times I see in marketing interchangeably use the word experiment with I tried something.
Right.
Um, and and even if you're sort of taking those big swings and you don't have to have as rigorous a approach to sort of again calculating things like statistical significance, you still need to start with some kind of a hypothesis. Here's what we think is going to happen. And so that way you have something that you're monitoring to say, did that, work or not? And so I feel like that's a really important insight for everyone who's getting started in this.
Oh, yeah, absolutely. And just to quickly double down on that, It's ultimately you're trying all of this to learn more about what works or what doesn't work. And I think this was the reason that we had these weekly growth meetings, or even if you do bi-weekly ones, is you want to be smarter about the next thing you do, whatever that thing is, right? And if you're not, if you don't know what you learned, you cannot be smarter about what you do, in which case you tried stuff you might as well not have tried it.
Yeah. Yeah. All right, let's dive into some of the retention and monetization content from chapters 7 and 8. And for those of you who are watching, um, love to have you participate in this discussion as well. There's a button in the lower, I think I have to point that way, lower right, the little red icon with the person raising their hand. At any point in time, if you raise your hand, you can come in and join the discussion if you have questions, or you just sort of want to comment or react to some of the things that we're discussing. Love to have you participate. Um, so, getting into some of the content on retention, in many ways, obviously, acquisition and activation are key, because without those, there's there's no discussion to have about your business. You have to have those things, and so that's sort of first principles. Um, but once you're beyond that, it really feels like the heart of it is retention. There's such great examples in the book about just a 5% change in retention rate can have a 25 to 95% impact on profitability, and the inverse sort of being true as well. Um, you know, Retention is the name of the game in terms of having a long-term successful business. Um, and you really have to kind of help new customers sort of set the right expectation for them, and then get them to the point where they're experiencing value, and now you're into the retention game. And you've worked with a number of different startups, and I don't think I mentioned this in the beginning, but I meant to. But you've written your own book on growth hacking for dummies, which is hilarious because you're not a dummy, but you refer to yourself as one. Um, uh, when retention starts to become the focus, how do you help teams get started with thinking about maybe the right things to experiment with, um, or even documenting the sort of flow that somebody needs to go through as a user? I'd love to hear you kind of say, how do you get started on focusing on retention?
Sure. So, and this may or may not already be obvious to people, but users don't think about it in terms of activation and retention. This is what we do,
Yeah.
uh, right? And so, really, retention actually begins when they sign up, right? And so, everything we think of as activation is really the first step of retention. It's
Mhm.
not really that different. Right. So I think for me that was one of the dots that got connected. A few years down the line for me is that I should not think of these as separate things, but I need to think of activation as early retention,
Mm.
right? Because it's not like they'll do a certain sequence of steps and stop, and now they'll do
Yeah.
something else. And right, there's a flow, um,
Yeah.
right? And so, and there was this research that came out. I think this is like it's a little old now, where somebody had done this research on some 3-4 thousand Android apps, and they found that with most of them, 70% of these people lost, most of them lost 70% of their users at the end of the first day,
Ooh.
right? And they lost another 15-20% in the next 2 weeks,
Mm.
right? And this was sort of shocking data to look at, right? And so the first thing that did for me, right, was to inch like almost reorient where I focus first, uh, right? Because I think it's very maybe easy, or because it feels like you look at these retention cohorts and say, oh, we have a retention problem, let's fix that, without looking at it a little more holistically and taking in, like, okay, where did all of this start? And inevitably, what you make people do or what they do the day they sign up or come try out your app, right, is what will predict long-term retention, right? So, and I'm, so even if I had no data on a company and I was, gun to my head and people would say, what would you do first? I would say, I would try and understand activation and run experiments there first, because that has a knock-on impact on everything that they do downstream,
Mm.
right? Because it is truly, uh, and so uh, a lot of that has to do with, I guess, you look at it sort of two ways, right? You look at what happens downstream, and then you look at what's happening upstream. So let's say we're talking about a sign up event,
Yeah.
um, right? And downstream is what, helps me understand is for the people that stuck around, right? What did they do on their first day or first week, or whatever the right frequency of usage, is, right? And what's different between what they did and what anybody else did? Because whatever they did or saw, something about their experience, right, is what I want to make easier and more obvious for the next person that shows up,
Yeah.
right? And uh, I think the other thing, and Sean has always been a great proponent of this, numbers are not the full story. The numbers only tell you what happened. They don't tell you why they happened. And, and I think this was why even somebody like a Sean stood out to me, because he was, I think, probably the only one advocating for qualitative understanding of users as much. Um, right. And so without that dual understanding of, okay, what are the numbers telling us, and now let's try and get a sense of why that's happening, you can't really build smarter hypotheses around that sort of test you're going to do. And so I want to sort of understand downstream, and, again, you pick your 10 best users, right? And then try and understand, like, okay, what was it, what did they do and why did they do what they did, right? Because that's make that most obvious for everybody else. Now, the second, the upstream part of the puzzle, of course, is that not everybody clearly will behave the same way, especially as more and more people show up. You can have as laser focused targeting as you want. It's just not going to happen. uh, right? And so then being able to tie in how people discovered you to then what they do downstream, I think, is the complete picture, that you want to build. And you can narrow the lens as much as you want. You can keep the lens only up to sign up and say, okay, look at who showed up. Like, were other people who are coming from Facebook ads signing up more, other people who are coming from content signing up more? What's different between their journey, versus anybody else's? Because you have different opportunities to make different kinds of promises in different ways in your marketing in any of these channels, right? So what they saw and experienced before they even signed up is clearly a big determinator of
Mhm.
whether they even will sign up, and even if they do sign up, how they will behave after the fact. uh, right? So I think I'd look to stitch both of these pieces together, because uh, again, this was some much smarter person's insight than mine, is that they looked at retention, and all of these analyses and cohorts that you build out, nothing different than a measure of your product market fit with that cohort, right? And because for the people that are behaving the way you want them to behave, and ideally you clearly have retained your product market fit with them. For the people that, came in and didn't even behave the way you wanted, them to behave, you likely don't have product market fit with that audience, which is probably something that was true even before you got to product market fit. It's that same dynamic playing out again in a post product market fit world, that you just have the wrong kind of people, right? And that was like a shocking insight for me to have gotten, that, oh, I need to go talk to these people even more and understand, like, why did I even attract you? So that I stop, proverbially peeing in my pool and having less of you in here. And, for the people that kind of came in but didn't retain as well. Now that is all as much a function of, me doing a good enough job of, and I'm sure we'll talk about this, is building the habit for uh, the product. But I think it's almost as much a function of, even if they were the right kind of people, did I do enough job of communicating the right thing so that they saw the right thing at the right time? Uh, and even here, the dynamic is so similar to, the very disappointed question from Sean, because when somebody says somewhat disappointed, right, it's either because they're not the right person, or they're the right person and didn't quite see what they should have. And if they just knew that, they'd be a great user,
Mm.
right? But I think you need to suss those things out. Again, this and it's shocking how much I go back to all of those questions, even in a post-product market fit world, because the insights you get from them, I think, are just as useful later on as they are early. And
Yeah.
so I'm trying to, build that complete picture when I'm looking at, uh, the kind of levels of usage. Is I'm trying to figure out, like, do I have product market fit with these people or not, or can I have product market fit with them, or if I do, great, what can I do, to keep them that way?
Yeah. Yeah, and if any of you watching have questions, if you're getting into that process yourself, and you want some of that free consulting that Anush was getting from his early days at using Growth Hacker, this is a good opportunity to be able to do that. Um, while we wait, and by the way, just make sure you. I think it's over. It's really hard to remember the lower right corner, the little raise your hand button. Then we can bring you up. And while we do that, I like the way that you are essentially talking about how critical it is to get that initial picture of what was the expectation set with the acquisition channel. How did we get our successful users to be successful? How do we make sure that all users, can get to that moment as quickly as possible? That we're attracting the right kind of users, and that work is quote unquote never done. But at some point, it reaches enough success that it becomes time for you to start to think about the medium term
Hmm.
retention, which is really that sort of habit forming. Um, and what how does somebody lay beyond doing those pieces? They've got their acquisition and maybe initial activation in good shape. Um, how do you know when it's time to start focusing on forming the habit? Would love to hear some of your experience
Yeah.
getting people started
Oh,
in that.
yes. Yeah. So you've just stepped into a really deep sort of conversation here, right?
This is the meaning of
Uh,
life. Don't you know it?
right, right. Yeah. So and I don't know what the right time to talk about this is, but I think this is why, understanding your growth model is so important, right? Because the entire purpose of that model is to help you mathematically understand, your key leverage points, that without those numbers, being at a certain level, everything is all over, right? And these are all key in control, whether it is
What can you say more about that mathematical part?
sure.
I th- I
uh,
I believe I know the parts in the book that you're referring to, but I wanna make sure that those, listening that we're
sure.
breaking it down.
Right, so these are all the pieces you control about, uh, the sort of user experience, right? So
Yeah,
I'll take a simplistic example of paid marketing,
perfect.
right? And so I'm sure many of us do that, and at some point, uh, you know we need a certain number of signups to happen from that paid market. So let's say, and but the only way you know that you'll meet a certain number of signups is if you have an understanding of what are these signups even going to do once they sign up, right? Which means, at some point, they will need to do X step, and then they'll need to do Y step, and finally they will pay. I mean, this is another reflection of the same R model, or all of those steps, right? But certainly I did this as well early on. Is I looked at that R funnel in complete isolation, when in fact it is truly the framework for a growth model. Uh, So even if you look at the conversion rate of your steps, right, from acquisition to activation, retention to revenue and referral, right, at some point, right, it's well and good to say, yeah, okay, our North Star metric is moving and we picked the right one, because if it is the right North Star metric, it'll help you meet a certain revenue goal. And at the end of the day, you're a CEO, you may have investors. That's basically all everybody cares about.
Yeah.
End of the day, you can have all the experimental wins you want, you can have all the North Star metric movement you want. End of the day, like, are we hitting our revenue goals?
It better move the needle on revenue. Yeah.
Right. And so there's a level of back math to be done that says, let's say I need to hit a Series A. I'm aiming for a Series A in the next 12 months, right? And that means a $1 million ARR. I am at 100K ARR. I have 12 months to hit, right? Every customer contributes whatever, $1,000 to my ARR, right? So now I can do the 100,000 minus 100. Like, okay, these many customers, so how many more customers or users do I need to start to contribute to my ARR so that I can get to 1 million, right? So that's 900,000, which I now have 12 months to make, right? So now I have a monthly goal, right? So that starts to build a model of, okay, here's how well my funnel needs to perform. At the end of the day, month over month, I need these many 100,000 or tens of thousands of ARR to happen. So back me up a step. What does that mean for people who continue to use the product? How many people have to continue to use the product month over month based on what I already know? Or if I don't know and I'm too early, make an assumption, and you can correct for that when you have more data. But how many people have to continue to use so they will actually pay me and contribute to this ARR? Right? And that's great. Okay, so what does that now mean for how many people need to sign up? Like, if I have like a 5% conversion rate on my sign up right now, what does that mean for how many people need to sign up to then continue using, which will be a smaller number, which will then be an even smaller number of people who need to pay me, right? And now if I need these many people to sign up, right, and I'm at a 5% conversion rate, right, does that have to become 10%, 20%, so that I can have a greater shot of hitting my 1 million ARR? Or if that's not going to change, what does that now mean for how much traffic I need to drive to my site so that 5% is meaningful, of a much bigger number, that I can still hit my ARR goals, right? And so now if I'm backing up to, okay, now I want to do paid marketing, great. Now I have a bigger lens to evaluate it through. Is not only am I looking at it through the lens of the signups, but I'm looking at it through the lens of everything they do all the way through my ARR generated. And I can segment every piece of marketing I do in terms of its efficacy, driving people through the funnel and contributing eventually to my monthly ARR goals. And then, be much more agile and experimental about increasing or decreasing, my activity in any one of those. Right. But I think that simple calculation, you don't need to create something overly complicated. But just that simple math of, I have this sort of a revenue goal in these many months, and based on my average selling price, per user, that here's what it works out to, as to how many users need to become customers in the next n number of months, right? And now work that all the way up, right? And that's your growth model.
Yeah. And this is something that you actually help. You say it's simple math. I think some people might feel like it's, and maybe after seeing it, recognize that it's fairly simple, just, essentially multiplication of things against a percentage as they move down your funnel. But getting that set up for the first time might be hard for people. Um, th- is, this is something you help people get right, isn't that correct?
Yes, and for a lot of people who've never done it or don't have data, right, you have to make assumptions, right? And this is why you
Hmm.
just, but you build those around these key points, right? I mean, for pretty much any company, right, number of signups will likely be a key leverage point for you, just as an illustrative example, right? And so, but as somebody trying to do growth, and and you as a CEO, you'll never have enough signups. I could tell you I got 10,000, and you're going to tell me why not 20, right? But for me to have a good answer for you as to why 10,000 is enough right now, I need to have built this model out and agreed with you that we need 10,000 signups in the next 12 months, and that's how we hit our goals. We can get 20 and we'll be even better, right? But if I've gotten 10, I'm on track,
Yeah.
uh, right? And so even if you're first starting out and you don't have any numbers, you can still take these very few pieces of data, right? What revenue goal do I have to hit in how many months, right? And even if it's not a revenue goal, let's call it a user goal. Forget
Yeah.
money, right? I need to hit, because again, I'm looking for next round of funding. My, Mr. Miss Investor said 100,000 users in the next 12 months. Great. Okay. Based on even if you don't know anything, you have a sequence of steps you need them to follow. Right? How well are you assuming each of these steps will work? And there are some, statistics and benchmarks out there as to how certain kinds of funnels perform. You can use those as starting points and adjust as you move along. So whatever perspective you take, whether it's revenue, user, whatever it is, without those key assumptions, what you lose is the ability to focus on those points that will have the maximum impact, right?
Yeah.
Because you can have your, changing button tests and moving things around tests, but if those have nothing to do with, I need to increase signups by 100x, or I need to increase my free to paid conversion by 20x, then it doesn't matter,
Yeah.
right? And so this becomes a great focusing mechanism for the entire team, as to all the other fires can burn. This is all that matters, because if this number doesn't go from A to 10A, right, it's all over.
Yeah. Yeah, that focusing element is really key for getting everybody on the same page. And, I like the point that you make around it. It's really about just getting an equation together and then starting with assumptions in there. And to the degree that you could look up click rates, conversion rates, cost per thousand impressions, and some of those types of metrics that are available in lots of different benchmark reports. And even if you don't get it right, just start somewhere. And as your actuals start to flow in, you update that, and you can see, what parts of this equation that if we change them are going to have the greatest impact downstream on revenue. um, One of those is something that comes up in chapter 8 on monetization, which is prices.
Right.
Um, I love the quote in here around, we often think about once the prices are set, they're set in stone.
Mm.
But in fact, that is a thing to experiment with. But it comes with a caution that I'm sure many of us have thought about if we've thought about experimenting with pricing, which is if you do it wrong, you can upset some customers.
Yeah.
Um, so I'd love to hear if you've got experience sort of testing with pricing, and either a cautionary tale of something that went wrong, or some best practices on how to get it right and avoid upsetting customers.
Uh, yeah. So I think that I'll talk about a couple of traps I fell into. So one was, and again, this may have just been, me unnecessarily complicating things that didn't need to be complicated. And in fact, this actually ties, and we didn't quite touch on it, but this would be a good opportunity to tie sort of, the medium term retention thing,
Yeah.
right? So, what I've always found as a good way to look at medium term retention, right, is what are most of the people who are here doing, irrespective of whether that is the thing I want them to do or not, right? Because if that's what they're doing, then that's what they're telling me is, here's where I get the most value from,
Yeah.
right? And I want to make more of that happen, irrespective of my feelings about whether that thing matters more or not, because they're telling me it matters, right? And when you first look at this data, it looks really weird that unprompted people seem to do this one thing that you don't care about, right? But so, and I'm sure there'll be many things, you can create a stack ranking here, but I like to focus on the biggest, most important thing, because again, that gives me a point to then contact people to then understand, like, why are you doing this thing, right? And certainly, why are you doing it at the frequency that you do it, right? Because that
Yeah.
then tells me something about where they're finding value and how much they value that thing, right? And I think when I first started out with pricing, again, like I'm sure other people just went to look at, what's a similar product, I'm going to price it similarly, right? And that is the worst way to go about doing it. um, and so I think I've made that. And so even though we think about the whole retention and monetization conversation separately, I think they're related because they give you insights for all of these things, right? You can, if you understand why people are retained, you can understand what they value, which then tells you how to price that value. uh, right. And the other thing I was making complicated for myself was, you know we always talk about the North Star metric as a retention metric, right? But it is also a value metric.
Mm,
uh,
if you get it
right.
right, yeah.
Correct, because your North Star metric has to be very closely associated. I mean, if we are saying that it is the number that measures value delivered, right, then the things they do by definition have value and is what you can build pricing around, right? And for whatever reason, that didn't quite. I Even though I was saying the words, the number that quantifies value delivered, it didn't strike me that, oh yeah, so maybe pricing belongs, in the region of these things they're doing,
Yeah.
right? Um, so and I had just like siloed my thinking. So pricing is the separate thing, and so I think that gives you at least a good starting point as to understanding, where your lever of pricing exists, right?
Yeah.
And even when you go back to this exercise of seeing what are the actions that people do the most, right? If you were to look at the top five, right, I think what you would find is that you know is some sort of signal around even decreasing sort of priority in your users' lives, right? And maybe what you would also find is a list of things maybe you think are super important that they're not paying too much attention to, right? And this was an exercise I saw, from, and I think Sean has quoted Patrick Campbell from Profitwell as well in the book, where he goes through this sort of relative value exercise, which I've stolen, which is literally asking people like, hey, here's five features, or here's five things, whatever it is, which one, and it's almost a version of the very disappointed and not disappointed exercise, where you ask people to make a very binary ranking of these five, which one is most valuable to you, and of these five, which one is least valuable to you, right? And that's a very, again, qualitative but very good directional exercise to understand, okay, here's where people are finding value and here's where they're not finding value, so let's not think about pricing from these perspectives and just from where we are getting the signal, right? And it's not just which, you're not asking them to rank these in terms of most valuable to least valuable. It's just you have to pick the one thing that is most valuable to you, right?
Yeah,
And I think
I
that gives
I
you a good
love that exercise. I too have stolen that because so many times we'll give people, here's a list of features, or here's a list that we want you to pick from of things that we're considering building, and we'll ask people to, check all the ones that apply. And then the problem is that your graphs, when they come back, everything looks fairly similar, because if you just ask people with no sense of scarcity,
yeah,
what do you value? They're like, "Well, I'll take it all. Why not? More is better."
true,
But once you do that psychology of pick the most valuable, pick the least valuable, then when you get the data back, it really produces a much clearer sense. That chart of here's your axis, and then some are on the positive, and then some are on the negative. Ah, just such a brilliant way to understand.
totally. And I think the other sort of trap I've fallen into, and I think this maybe applies to maybe more earlier stage companies, right, is maybe when to start thinking about pricing.
Mm,
Right, because I know the instinct is to always think about it as early as possible, right? But in some cases I have found that without a clear understanding first of why people even stick around in the first place, right, it's very hard to have that would you pay for this thing kind of conversation, because
Yeah.
you don't really know, right? And I think this is certainly true at the when you're getting signals of product market fit stage, of the company. Uh, and uh, the point, and I know Sean makes this case, in his startup pyramid of once you product market fit, setting the stage for growth and then growth. I think this setting the stage for growth phase, right? I think is when you want to start thinking about pricing, at least in my experience, because you're getting to product market fit is a I just need to get here somehow. It's not about building in something repeatable or predictable as much in terms of all of your
Yeah.
processes, right? It's about finding the right person and you know testing your must-haveness with a certain audience. Um, and if it means during that stage that you still want to have the pricing conversations, you can actually go crazy in this stage. Like
Mm.
you can offer somebody a 90% discount, you can quote somebody a really crazy price just to see what happens. And I actually love doing this because you might feel terrible saying, "Oh, this thing is a $10 thing," but I'm just gonna say 100. Let me see what
Yeah.
happens. Right? And
Yeah.
if somebody doesn't blink, you're like, "Holy crap, I can charge $100 for this thing. This is great." Uh, right? So I like that playing around, and I don't think it hurts as much in this around product market fit ish stage. But
Yeah.
I think you'll certainly learn enough at the setting the stage for growth stage, where if you're going to build out this growth model, right, that says I need this sort of ARR in these many months, then what you're trying to do is get something repeatable, scalable around pricing, and you want to learn more about what do your unit economics look like, much more strongly, because in that next growth phase is when you'll be pouring gas on all of this. So
Yeah.
I think this stage of when you learn more about pricing, I think is sort of really critical, because you'll be testing so many more channels and you'll have gotten a signal of what are your top three channels. And again, this is why I love that PMF survey, right? Because one of the questions is, how do you hear about us? Like, great, now you have a top three list of channels to experiment with. All right, so it gives you a much, I think, cleaner and clearer way of now sort of very systematically testing your way through certain high quality channels and seeing whether do these people hang out long enough, and do they hang out long enough to pay me or not, and then what is my uh, what do my actual costs look like to even acquire these sorts of people, and how much can I even charge them.
Yeah. 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 That's such an important set of equations and discipline for us to really understand how we're gonna hit our goals as startups. And you know, just calling out here, we have about 7 more minutes left. And if there's any of you watching, if there's a thing that you highlighted or a part that you wanted to be able to ask Anuj, I'd love to hear from you. There's a little button in the lower right where you can hit raise your hand. Love to have you join the conversation. Um, I'll share a quick thing while we're waiting for that, which is in that last chapter. Part of what, if you're so lucky as to make it through many of these gates and to really hit some significant growth, a key thing that they warn us about is complacency, right? Starting to rest on your laurels. And in fact, one of the best examples they go through is how growth hackers themselves actually had to go through this and sort of learn their
Yeah.
own lesson. Um, I'm sure you've seen this in teams or maybe even experienced it yourself.
Totally. And it's even more, I think, weird with earlier stage companies, because the complacency comes from really false signals
Hmm.
of, hey, we got a quote from this big article, and that's great, we're done, or some big name signed up for our product, and awesome, it's all made. So sort of these one-off signals that say people that we're set for life now. That's all they needed, were these one or two or three things to happen, and we're fine.
Yeah.
So uh, I that I think tends to lead to, I think, certainly what Sean espoused, right, is that your rate of learning slows down dramatically. when you start to sort of sit back, right? And I think this is why Sean has espoused, these weekly or bi-weekly meetings and this high tempo testing process, right? Is because that really is the only growth hack there is you learning faster than your competition about what works and what doesn't, um, right? And uh, the the only way you can make that happen, right, is to have the team constantly engaged in the process, right? And 'cause the cliche is true, right? Growth is a team sport,
Hmm.
and it's also simple math, right? This one magical growth hacker sitting in a corner, which is not a thing, but by the way, it's a myth. You know, them waving a wand, doing something. You know, one person cannot compete with an entire company rowing in the same direction, right? It's just simple math, right? And for that to happen, everybody has to have the same level of urgency around what we do and how we do it, right? So there can be no place for complacency, right? But this is part of the job of partially of the person who leads growth, is they are there to bring the entire company on the ride with them. And one way that happens is clearly when they can lay out the map, right? So things like growth, to understand, like, here's why we're doing what we're doing, right? But then everybody has to come along for the ride. And this is why I like the North Star metric as a concept so great, or so much, because it has very unifying power. Because everything we do should be in the service of growing value delivered, right? And if you don't know how what you do either helps us learn more about how to move value delivered or to directly impact it, right? You're clearly working on the wrong things, right? And
You
that's
know,
a question.
team dynamics is something that you and I talked about, and you had this pretty interesting insight about because in the book there's so many principles that you look at it and you're like, oh wow, this sounds great.
Yeah,
Um, I wish my team was like this, or I wish
right,
I had this kind of, I was set up for success like this. And this is
right.
something that you work with teams on. I'd love to hear you say a little bit more about that.
Yeah. So there's two things to say. So one is that who the person leading growth is really really important,
Yeah,
because the way they lead growth is going to have an impact on how your team takes actions, how your team communicates, and how your team makes decisions, right? And if you're going to have this culture of moving fast, right, and trying new things out, that comes from the person leading the team, right? Because you want these, you know, while you want people to align, you also want people to challenge the status quo. That's the name of the game, right? You don't want people feeling hurt about things or whatever, right? But all of that stems from this person, and I think this is certainly a bigger cultural conversation within the company. So teams without a high degree of trust cannot align on anything. They'll just go
hmm,
along for the ride, right? And so this is where it merges with the trust triangle idea from the five dysfunctions of the team, because trust is at the foundation of every high performing team. And like, without that trust, you can't get into this challenging the status quo, having productive conflict, even challenging analyses. Like, I know I used to analyze experiments at growth hackers, and Sean or whoever else, like, they challenge those every time. That was part of their job. They're not there in that meeting to passively take what I say and say, okay, good job, what next, right? So that's
yeah,
part of a healthy kind of culture within the team, to do that, because only then do we, when we have that conflict and have our say, can then we agree on, okay, what are we going to do next, right? Then we can actually commit on the right thing, to doing whatever it is next, right? And that's when people say, okay, we've sort of fought about this. Okay, we've now agreed on the way forward, and I take responsibility for this now. And that's where results come from, right? Is when you've tackled all of these dysfunctions, as part of this team. And I think these dysfunctions are as critical to the growth team as they are to the entire organization. But the person leading growth, I think, absolutely, you know, has to have this in mind, and have this constant flow of, am I building trust? Am I having enough productive conflict on this team? Because otherwise, we're just not going to hit our results.
Yeah. And my understanding is you're gonna do a special program for um, some folks who are looking to build their growth teams. Can you just share quickly what that opportunity is?
Yeah. So this is me projecting all the things I failed at, and attempting to make sure that some people don't fall into the traps I did. And so all of these things we've been talking about, right, is whether it is understanding, what's a growth model look like for us, and how do I get my team to buy into that, and how do I harness the entire team around it, and certainly, if we get that process going, how we can start to ask some good questions, right? So all of these questions we've been talking about around monetization, retention, activation. How do we learn to ask good questions? So I'm building my first cohort-based course around that, a short 3-week thing. I have a link on my featured section in LinkedIn. If you're interested, you can sign up to at least for updates, and hoping to run that in July as a first beta cohort, and again, hoping to have fewer people make the mistakes I did.
Well, I know fewer people will just by virtue of having you on this show and getting to, sharing some of the wisdom that you have. So thank you so much for joining us. Um, and as just a quick reminder for everybody, this Tuesday, we're also going to have Sean join us, one of the authors of the book, so we can do an Ask Me Anything session. Anuj, thank you for joining us today.
This was great. Thanks for having me nerd out with you.
All right. Talk to you soon.
Bye.